A holding company's true power isn't always found in headline operating revenue. For GT Capital Holdings Inc., the story of 2025 reveals a quiet but deliberate strength, centered not on everyday transactions, but on the steady flow of dividends from its most prized assets. The numbers speak clearly. GT Capital Parent reported 1350 billion pesos in net income and 14.61 billion pesos in total comprehensive income. But beneath those results lies something more telling. Over 17 billion pesos in dividend income, forming the heart of its earnings. This is the hallmark of an ideal holding company. Lean at the core, liquid enough to meet every obligation, and driven primarily by cash generated from strategic investments. Where did these dividends come from? Metrobank stood out, contributing nearly 9.65 billion pesos. Toyota Motor Philippines followed closely, delivering around 7.67 billion pesos. Together, they made up the bulk of the parent's income stream. This concentration, balanced between banking and automotive, means GT Capital's cash generation isn't dependent on just one sector. Instead, its earnings are backed by two pillars, each powerful in its own right. Ownership tells the story further. At year-end, GT Capital held almost 40% of Metrobank and 51% of Toyota Motor Philippines. Both companies not only powered group results, but also fortified the parent's distributable cash. The income statement, therefore, becomes a measure of how efficiently GT Capital converts portfolio strength into cash returns, a metric that investors watch closely. Balance sheet figures reinforce this stability. 234.42 billion pesos in assets, 168.96 billion pesos in equity, and just over 55 billion pesos in loans payable. The conservative capital structure, highlighted by a 72% equity-to-assets ratio and manageable leverage, signals resilience. Cash and easily marketable assets amount to 27 billion pesos, with liquidity ratios confirming GT Capital's ability to meet short-term obligations. Operational cash flow was almost 18 billion pesos, reflecting healthy upstream distributions. Capital was actively deployed, obligations fulfilled, and dividends paid out to shareholders. Despite steady outflows for investments and financing, the final cash position echoed confidence, not stress. Strategically, the near-equal contributions from Metrobank and Toyota offer meaningful diversification. Banking provides stability and recurring value, while automotive adds exposure to consumer demand and manufacturing. This balance ensures GT Capital's parent company isn't reliant on one market cycle, but instead benefits from two complementary engines. Challenges remain. Operating costs and interest expenses weigh on gross inflows, and the model depends on continual cash remittances from subsidiaries. Yet risk remains managed and compliance strong, underscoring financial discipline. At its core, GT Capital Holdings Inc. stands as a precise allocator of dividend-driven value. Its 2025 results demonstrate financial solidity, robust capitalization, and a sustainable model built on strategic stakes in Metrobank and Toyota Motor Philippines. As investors look ahead to 2026, the lesson is clear. The center holds because the cash keeps coming up, creating confidence in GT Capital's ongoing strength and stability.